how we roll. And we're winging it. Hey, Jeff, how you doing?
Good. How are you? Winging it. Winging it. No time to prepare. Get to it.
We're busy, man. We got deals to close.
There you go. There you go. Yeah. Just turn the red light on and
Wednesday.
go. Happy Wednesday, indeed.
Yeah, absolutely.
Mm-hmm.
Yes.
It is absolutely pouring rain out there.
Oh, really?
Like, can barely see the houses across the street. It's coming down pretty good. Wow. Yeah. A bit of fog too, adding to the mystique. So cool. How is it in Austin? Is it bloody hot?
Yes. No, yesterday we had a crazy storm coming in. I went to go to the gym at 6 and I'm like charging out the door, and then it started raining. I had to get a lift. Don't have a car yet, so I've been relying on scooters to get to the gym.
Oh yeah.
So that was fun. Today I got there no problem. So, but it does look like it's going to rain again. But it was a hectic storm. It was like coming in sideways. It was pretty cool.
Is it those lime scooters that you have there?
Yeah. I lime it for the gym.
Mm-hmm. Nice. Yeah, I like those. They're pretty fun.
Awesome. It is. But we're not here to talk about scooters. We're here to talk about what buyers want.
Yeah, unless you have an FBA scooter business.
Yes.
Then we'll talk.
Absolutely.
What was your question?
Why did we start this segment? Do you remember?
Why did we start it?
Since we started it. So.
Yeah. Well, I mean, we just kind of figured there was no reason to, withhold this information. We are served with buyer criteria on a daily basis. We get tons of emails coming in saying, hey, this is what we're looking for. But talking to sellers all the time, it's like, it never really, comes out and say, what's my business worth? Or, do you think my business is sellable? And all this kind of stuff. It's like, well, why don't we share what buyers actually want? And so, that we're not just making this up.
Yeah. And even Paul wants to know, what do
buyers want?
Thanks, Paul. Yeah. We'll discuss what we've been seeing this week. We've got some good stuff to discuss. We're just taking a quick look at it, and we thought we'd hit go because we were a little late today. Again, thanks to me. But I'm the bottleneck here. Anyway, we'll add the sheet to the stream like we normally do, and we'll start at the top.
Indeed. All right. So investor number 1 looking for 1 to 5 million in annual net profit with a 20 to 25% margin. They're interested in looking at any category with top selling products in subcategory 1 through 5 with 2 years of sales 2 or more years of sales history and strong real reviews.
Mm-hmm.
Right. Top selling products in subcategory. 2+ years. Why?
Mm-hmm.
They probably have 2+ years if they're doing 1 to 5 million in profit. And strong reviews.
If it was year 1.
Yeah. Right. Yeah. What's your secret sauce? Yeah, strong reviews, real. Yeah, that's going to be a tough one to prove, I think, is it not? I mean, obviously, all the sellers that I talk to usually describe how they get reviews or describe their review. But yeah, I mean, I guess they're just trying to stay away from anything that it's kind of like those black hat tactics. But I would imagine that if you're operating in this category, earning $1 million+ and you're a top selling product, that I would imagine that you've kept things fairly clean, I would hope.
Hopefully. And
hopefully,
if you haven't, you need to disclose this. You need to disclose what you're doing, at least to your advisor first, but definitely to the buyer at the appropriate time. But I want to talk a little bit about the top selling products and subcategory, what they might mean by this, because I think that's kind of interesting.
Mm-hmm.
So while they're saying any category, what they're saying here, top selling products in subcategories, could mean in the same category, right? So as we talk about buyers in this range, larger buyers want a tight brand focused on the same demographic. So they're saying in the subcategories below, right, maybe 1 to 5 layers deep in that same category could be what they're referring to here. Or they could be literally referring to, on Amazon, you click categories, and I just want the top 1 to 5 categories in Amazon as a whole. Either way, they're wanting something pretty focused here, even though they're open to category. And as we've talked about before, there's just less companies, less brands that get to this scale. So oftentimes investors do, and the frequent buyers that come through at this range, they want to see everything because they're open, and it's hard to find specific categories that are doing this level of EBITDA. Yeah.
And just harping on the reviews thing, I don't want to spend too much time on this the first one here, because there's quite a few to get to. But the strong reviews real. And now, if there's somebody's been in business for 5 years selling on Amazon, they probably started with some tactics that are not considered good to do now, but at the time that was just kind of what you did. So
yeah.
How much does that matter now, 5 years later? Let's say you started in 2015 and you did some shady things, you got some reviews, because that was the game back then, before Amazon started closing the door on those kind of things. And how much does that really play in now? If you operate your business properly now, do you still need to go back and disclose all that kind of stuff?
Yeah, so it's a risk factor. However, like you mentioned, if someone's been around 5 years and they've gone through multiple review updates and their reviews are still sticking, that's a really good sign. But specifically, every buyer in this category, in this space, wants to know how you're generating reviews, because they want to see what you're currently doing and measure that risk themselves. Maybe they're okay with how you've done it, but maybe they're going to do it a different way, right? So they just want to know what you're doing, how you're doing it. Is it in line with the T's and C's? And what are your thoughts about changes? Because you've been in the industry. What have you seen other competitors doing? That's the type of conversations we typically have in diligence around reviews.
Got it. Yeah, because I remember when we sold our site last year, our site was 6-7 years old at that point, and it was basically a Frankenstein of every strategy that we'd ever come across and ever tried. Once we got it to a point where it was successful, obviously we didn't really employ any of that. But when a new strategy came out or we got wind of something, we tried it. So when they say, "Did you ever do something like this?" Ever? Well, yeah, we tried it for a bit. Have you ever employed something like that? Well, yeah, I guess, but how much is that really going to matter now? Yeah. Cool. All right.
And the more upfront you are with that stuff, the better. Like the honesty is the best policy. The worst thing in the world is for someone to find it out later and you haven't told them about it. It can kill a deal.
Yeah, diligence, where deals go to die, right?
Range.
Yes,
exactly.
All right, so next investor, also looking in the 1 to 5 million in SDE range, 15 to 20%, so slightly lower net margin, looking in the B2B category, business to business, and their criteria is as follows. Article 1, historically stable cash flows. 2, sustainable market positions. Fragmented customers and suppliers, companies outside high-tech industries, and B2B.
Yeah.
It's like a lawyer wrote one.
I think we've had 2 MBA graduates come through this week. There's another one like this in a couple of lines. This is really telling me that they're wanting textbook acquisition targets. So when I say textbook, there's literally textbooks out from some of the top MBA schools in the States, and probably
he's copied and pasted from that same textbook here with the Roman numerals are a nice touch.
Yeah, exactly. That's nice. Yeah, exactly. It's part of his thesis, and he's just copied it in for us. Excellent.
Subsection 3, you'll note.
There's a really good book called How to Buy a Small Business. It's written by 2 Harvard Business School professors that run an MBA program called Entrepreneurship Through Acquisition. There's one at almost every top MBA school in the States right now. These guys, they go out. They essentially teach them a criteria of how to transition a retiring owner, and they give them a really tight criteria. One of the reasons it's super tight is because the professors and their friends fund these guys, and they're called a search fund. There's also private equity groups that fund search funds. I might be going a little bit deep into this, but I'll try and keep it brief. That this is a common theme that we see. I get emails like this every day from different groups. We're looking for this, and they give you their real strict criteria. They don't look at what type of deals we promote. They literally get a list of business brokers, M&A advisors, investment bankers, and they just start throwing out their criteria, hoping to get some deal flow. The really nice but frustrating thing is they email every couple of weeks until you say stop. But anyway, there's a lot of these buyers out there.
Yeah, well, actually, it's a pretty cool thing. If you basically like graduate from Harvard with an MBA, and you can basically buy yourself a CEO position.
Yeah, absolutely.
Right off the bat. I mean, that's kind of what it's all about. So that's actually kind of like, it's a cool concept. Frustrating for people in our position, but it's a cool concept. Okay.
Yeah.
All right. So the next guy, investor here, I was going to say guy, but I got to get out of doing that. We got 500,000 to $1 million SDE, and that's about all we know. Yeah. So 25 to 30% profit margin, but they've not given us anything to go on. Nothing specific. Once again, this is like somebody who just wants to see, like, especially at that 500 to $1 million range, they just want to see a lot of deals because they don't really know what they want, right? I mean, this is, they just want to see what's out there.
And maybe they've come back again because the exact same criteria is underneath in the gardening category. So maybe they better think about it and said gardening. Or maybe the opposite. They're like, gardening. No, that's too specific. Anything.
Yeah, there you go.
I wouldn't be surprised if that's the same person. We can check that later. But obviously we don't. We keep the innocent hidden here. Whatever.
Yeah, sometimes I wonder if we really should, but yeah, there you go. But yeah, okay. So next one might be the same person, same metrics, but gardening and acquisition. Well, okay. Again, although they've been more specific, it's still not telling us anything.
Yeah.
Unless you have a gardening category site out there. So yeah, not really much to talk about there.
No. Pretty straightforward.
Pretty straightforward, yeah. All right, so the next person looking for 500,000 to $1 million. Hey, maybe this is the same person again. Oh no, they've lowered their 20 to 25% profit margin. They have a preference for home goods, but are flexible for the right deal, I guess. But it needs to be SBA eligible. Other negotiable items. Well, I hope so. I would hope so. I hope there are many negotiable items.
Mostly their price and cash at close.
Yeah, mostly, but generally everything.
Yes, yeah, absolutely.
Yeah, okay. So once again, I suppose people are getting an idea of how frustrating this process can be with, what buyers want. We're still asking these last three. What do you want? But
yes.
Yeah, so it does take some back and forth to really hone in on exactly what they're looking for. Okay, so again, not a whole lot to talk about there. Somebody looking for an SBA business, which means it has to be a U.S. entity, and they have to have paid U.S. corporate taxes for at least 2 years. 3 is better. But at least 2. So,
and show profit on your tax return, by the way.
Yeah, right.
Not just zeroing out. That doesn't help us at all with the SBA.
Yeah.
So
there has to be something that the bank can work with, right? There's got to be something that lenders can see and say, okay, there's leverage here. Okay, so next one, 3 to 500,000 in SDE, 30% plus in their net profit range. They are open to category, but they want recurring revenue, strong demand in all market environments, and small enough. What is TAM? That won't attract competition from Amazon.
Amazon.
That won't attract competition from Amazon. So perhaps
I've
they're not looking
seen that before. Yeah.
Anyway, any guesses on what it is? Put it in the comments. But
total addressable market. That's what it is.
What is it?
Small enough market. Total addressable market is what they're talking about here. So they want a small market so that Amazon doesn't say, hey, there's $1 million a day to get in this market, so I won't. There's a concept that Amazon won't go to a small category to compete, right? So they're assuming that the only reason Amazon goes into a market is to compete on volume. That's not the only reason they go into a market, or they won't go into a market. We've seen other reasons being quality, high quality products, branded products. Amazon doesn't do so well in those categories themselves because they're not all about high quality. So if quality matters, even if it is a bigger market, they may not choose to compete. But that's what they're saying. They're wanting some defensibility against Amazon coming in.
With their basics.
Yeah, or any of the other brands. But yeah, they don't typically do quality well, so broadly speaking.
Right. Yeah. Okay, cool. Total addressable market. That's okay, cool. Next one, we've got again 3 to 500,000 in SDE, 25 to 30% profit margin. They're open to category, and then here we go. This, I think, this is the other possible MBA grad here. We've got established and enduringly profitable, boring with steady growth, solid management in place that will stay with the company, an owner who has a motivation to sell, so likely retirement, but does not possess a particular skill that would be hard to replace, a strong position in their niche, or niche, of course, so I don't want to offend our American brethren, a strong reputation with customers and employees, a low customer churn rate, between 500,000 and 2 million in SDE, though I've entertained companies with pre-tax profit as low as 250 if the EBITDA margin is 20% or higher. Okay, so good. That's excellent. We've got something we can work with. Yeah. For sure. Yeah, somebody has actually taken the time to understand what they want and communicate that. So, but boring and steady growth, they're talking about an unsexy product here, possibly, right?
Yeah, what a lot of these guys, the concept behind it is recession-proof industries that have a defensible position. I had Brent Bishaw on Truth About Exits, and we were talking about this. They follow the same kind of principles. They bought a pool restoration and design company that had been in the market for 30 years and was just a far and away leader in the space. So typically when we get these type of buyers come through, a traditional FBA business won't usually be a fit because it's only 3-4 years old. However, there are clients that we're talking to that have been around 10-15 years. They just happen to also sell on Amazon as a channel, but their business has been around longer. Also, it's rare to see full management in place as far as the corporate level management in place in most e-commerce businesses. So, but that being said, just like his SDE range here, or their SDE range, some of this might be negotiable because this is definitely cut and paste from the textbook. So whenever we talk to these buyers, we go into, okay, so this is your criteria. what's the non-negotiables and what's the negotiables. What are the absolute must-haves and what are the nice-to-haves? Because there's always a way to bake in what they want to the deal, unless it's time. If they have to have 20 years in business, well, if we don't have 20 years in business, that's a no-go. So, yeah.
Yeah, and solid management in place, at the lower end of their SDE range is probably just going to be like an operations manager, right? It's not going to be a team necessarily. Towards the higher end of that SDE range, there might be an ops manager, there might be a warehouse manager, there might be a couple of people, but we're not talking like a network of managers here, I don't think, at that level.
No, there probably won't be layers of management, because they're also, the good thing about a lot of these MBA types, they're wanting to step in as the CEO, like you said. So they're wanting to operate the business. They just want people in play. Their skill sets typically, because they've done the MBA, they may have category experience, but they're more financial oriented or focused. So they're wanting to tweak the financials, make sure that everything's running properly. So they need people to actually be doing the work.
Okay, cool. Is there more to discuss there, awesome. Do you think, or is that what covers that?
No, I think that's the main points. Oh, one other thing is the SDE range. You might be thinking, why are they looking for that SDE range? Well, this is typically below what a private equity firm would be looking for. So they're trying to kind of skate under the radar of most private equity groups. Because what they're wanting to do is put professional management in place, get the business growing, and then potentially sell it 5 or 10 years down the line to a bigger private equity group once they've scaled the business up.
Right. Yeah. All right. Okay, where are we at? Oops. There you go. Okay, so, oh man.
This one's a bit weird.
Yeah, right at that page break there. Okay, so 300,000 to 500,000 in SDE, 20 to 25% net profit. We're looking for a private label business across all categories or niches. 1 to 5 million in revenue, with 20% plus EBITDA. Well, let's expand that. EBITDA margin and 20% annual growth potential. 1,000 plus reviews and ratings per SKU and concentrated number of products. Monopolistic products. Wow, they're pulling out the big words. In high volume and constant demand niches, stable prices with high margin categories, low top brand competition. Man, did a bunch of the MBAs just graduate? Kind of seems like that.
Yeah, maybe.
They just got awarded their MBA. It's June. It's the end of the school year. Wow, this is they're all coming out here.
Yeah. Well, they were bored during COVID, and now they want to go buy businesses.
Yeah,
this is great. No, but this is great. I mean, normally we give buyers a hard time for not putting in criteria. We can't be overly critical of a hyper-focused criteria. This is actually helpful. Really helpful, actually, in this case. So, yeah. Which one do you want to talk about first?
Well, 1 to 5 million revenue businesses. Okay, that's fine. 20% annual growth. You have highlighted this in the past as being an important number because that's Amazon's benchmark, right? So if you are under 20,
Amazon's own growth rate.
Yeah. So if you're under that and you're an Amazon business, you're flat or you're in decline. And so the goal is to be over that. But this is 20% annual growth potential. So they're going to look at a business that's, that they could sort of model if they were to sort of inject their process on how that would look. But 1,000 plus reviews is fairly low. So, I mean, it seems like they're looking for a fairly new business, a couple years old, maybe.
A concentrated number of products, so that they don't want 1,000 SKUs. They want it as tight as possible. So I like that.
Yeah,
it's cool.
And stable prices, high margin. I think everybody would want that.
Yeah.
And low top brand competition. Yeah. So I suppose, everything's kind of flying under the radar on this one.
Yeah. I mean, this would be a great business based on what they've just said, which is why they're looking at any niche, because they need these specific metrics, which aren't impossible. We do see businesses like this quite often, but they're saying if it looks like this, then we're going to be open to the categories. So this is okay in the fact of not having a niche focus. If they had the niche focus as well, it'd just limit the amount of businesses or deals they could even look at. But this is cool. This is really helpful, actually.
Yeah, well, I'm glad they're realistic with the, with the ranges here, the margins at a business with, a fairly low SDE comparatively. Because that sort of opens up to more categories as well.
I agree.
Cool. Moving on. All right. Somebody looking for, I guess, a whole bunch of people down here looking for lower value deals under 300,000 in annual net profit. 15 to 20% would be their net profit range. Again, they're looking in any category, and they're just looking for purchase options at this point. What did you call them the other day? Plate lickers?
Yes, plate lickers. This is a plate licker.
Yeah, you go to a big fancy dinner with no intention of donating or no intention of writing a check. You just want to come in and lick the plates and go home. Love it.
Or a window licker. So in the real estate world, they have all their listings up on the window. So people that just stare at the window are window lickers. It's a similar approach.
Oh, I love it. I love it. So they
no
just
offense if you're watching this. I mean that in all good fun.
Yeah. But yeah, I mean, you gotta see what's out there before you can sort of make a decision. And again, I don't know. It's grad season, I guess. So under 300,000, 20 to 25% in net. Again, looking for any category and looking to buy their first online business. Okay. Well, yeah. What do you say about that? I mean, looking toward buying their first online business. I mean, tough people to deal with sometimes.
So this is a good representation of smaller buyers, and both of these are first-time buyers. I wouldn't be surprised if that was the same person. I'm just trying to widen their scope by saying different margin and a little bit of a different thing, but they're basically at the start of their journey, which is fine. There's lots of places to go see a lot of deals very quickly. Market Watch Monday is a great place to see that. We link to everything. Just so you know, if you're thinking about selling a business, these are the buyers that you don't want to show your business to yet. They might become good buyers, but they need to figure out what they're looking for first. We do not send deals to these type of buyers. And also it's a function of smaller buyers because maybe they've got a few $100,000 stocked away or $1 million or access to SBA debt, let's say, but they're brand new and they don't know what they're looking for yet. We typically let them go into the market, figure out what they're looking for and come back with stronger criteria, or we ask them. And if they can't define the criteria more and they don't have operational experience, then we let them go elsewhere first.
Yeah. Good. Okay. So next one, again, looking for a smaller deal under 300,000 in SDE, 30% plus margin in the beauty space, and looking for an FBA business that's trademarked approved with less than 20 SKUs. All right. Not impossible.
We have one of these, but it's 7 SKUs and 9 million in revenue. So definitely over 300,000 in SDE.
Yeah, I was going to say if they're 9 million in revenue
and
under 300,000 in SDE, they've got some problems. But
yes, absolutely.
Yeah. Yeah, but I don't know, man. If you're under 300,000 in SDE and you're in the beauty space with trademark and less than 20 SKUs and you've got 30% plus margin, it'd be tough to let that one go right now.
Yeah, I think so too.
I'd be inclined to keep it and let it grow. Okay, so once again, next one, under 300,000, 15 to 20% in their net profit range, and they've given us absolutely no information further than that. So Again, probably a first-time buyer. Another one under another 300,000, 20 to 25% in net profit. Most interested in eyewear, open to anything creative. An Amazon business selling 1 to 5 products at the low end, 30 to 100,000 EBITDA, or something much larger up to $1 million if it was specifically in the eyewear. So, okay. So they're looking to spend when it comes to eyewear, probably adding on to something that they already have or expanding. I think we've seen this guy before, but open to other creative businesses, but they're going to let go. They're not willing to deploy a whole lot of capital in that. But if it was something in eyewear, they'll go for it. So
this is quite interesting because we do this every week, and if you've been watching before, you've seen this as well. But you see the difference in the price range, and it's rare to see someone like this that has leveraged some sort of strategic angle wanting under 300,000. Most of them, they want size. They want something that can really move the needle in their business if it's strategic. So, if you're thinking, I want a strategic buyer, but your business is smaller, this is why, because the bulk of those buyers out there are first timers. They're not strategic. It's too small. So this is like why we talk about things the way we do, because this is the result. This is who you're dealing with in these ranges. But it's cool to see that they're still there in some categories.
Yeah. All right, and then last one, again, not a whole lot to talk about here, but under 300,000 in SD, 25 to 30% margin in any category, something around the $1 million price range. So again, they're just kicking tires.
Well, we know they want to spend $1 million, so that's
I guess. But they just looks like they just want to see a lot of deals and see what's out there.
Yeah, I'd say they're pre-approved for SBA financing. I would guess to around $1 million. Right. So that would be my guess anyway. Yeah. Awesome. Cool. All right. Well, that's what buyers want Wednesday. That was fun, man.
That's what buyers want this week.
Yeah, exactly.
Yeah.
Anything else to add after we went through that?
No, but if you have a business in any one of these categories, or if you feel like any one of these buyers might be a good fit for you, I mean, certainly reach out and we'll see what we can do. But yeah, I see where you're going with this, Corin, so I'll just take it away. sales@thefbabroker.com is the best email to use to come straight to my inbox. If you're thinking about selling now, if you're thinking about selling 2 years from now, if you want to talk about what you can do to increase the value of your business, talk about exit planning, want to see what the market might value your business at if you were to list today, any of those things, send me an email, sales@thefbabroker.com. We'll have a conversation and see how we can help.
Awesome. Cool. Well, hopefully that was helpful. Do drop any questions in the chat as well on any of these lives, because we are live right now. So we're happy to talk through anything like that. And otherwise, have a great week. Thanks, Jeff. Thanks, everyone, for watching.
Bye for now.